Let's also look at the corporate tax and its effect on corporations and employees, because we can't we've got to look at everything holistically when it comes to the tax laws. And when they talk about how the corporate taxes are too low based on the current plan, or Biden plan that he has, you got to see how what the proposals are going to do are going to affect not only corporations but employees. Let's take a look at how that works out. So the corporate tax rates from the Democrat side is looking at moving it from 21%, which is where it is currently, to 28% on income earned in the company, the profits. If we take a look at the Republican plan, they would like to keep it at that 21%. Now, again, if you're looking at the corporate rates, you've got to look at not only big corporations, because the corporate rate affects all corporations, large and small. So let's take a look at the small business owner, because we know the small business owner accounts for about 50% of the revenues in the business and the GDP when it comes to the corporations here. So looking at a small business owner, if they moved from 21% to a 28% tax rate on their profits, well, this is kind of what it looks like. The $200,000 profit in this example would have an additional 7% tax on it. So this business owner would end up paying an additional $14,000. Now, how does that play out, though, when you're talking about adding that tax to the proposed Social Security payroll tax increase that's coming down the road here, if this plan goes through? So the Democrats' proposal on the Social Security payroll tax is to increase it an additional 12.4%. Well, that breaks down into two different groups. 6.2 for the individual employee to pay, and 6.2% for the employers. So that's double what both groups are paying right now. The proposed plan is saying that if you have income greater than $400,000 as an employee, then you will end up paying 6.2% above that $400,000. Now, let me back up a little bit here. Currently, if you have wages up to $137,701, you get charged a 6.2% tax. It comes right out of your paycheck before you get it. What would happen if you earn more than $400,000 is between the $137,701 and $400, you don't pay any additional. But if your income is, let's say, $450,000, then you would pay the tax on the additional $50,000 over the $400,000 threshold. So you end up paying a little bit more if you're making more. So again, I want to repeat, in this scenario, they're talking about adding an additional 12.4% on top of the current 12.4% that's being paid today. If you look at the Republicans, they're talking about maintaining what we have already. And again, that's a Social Security payroll tax for individuals, the employees at 6.2, and the employers at 6.2, all the way up to 137.7 on your income. So there's a major change right there. Think about it. If I'm an employee, they're already taking 6.2 out. If in fact the proposal goes through, now they're going to take 12.4 out. That kind of hurts. Not only the business, but the employee. So look at this. I'm going to show you kind of three AGI scenarios. If I made $65,000 for a company, that was my wage, I would now be taxed at 12.4%. Well, that's about $8,000 every year. Well, What if I made 150,000? Well, now I'm going to pay 17,000 a year in Social Security benefits tax. What if I made the 477? So it's above the 400,000. Well, 12.4% all the way up to 137.7, and then another 12% on anything over the 400,000. So in that case, I would be paying 26,622. And I have to stress this. This is not all your taxes. This is strictly your Social Security payroll tax. Now, I also want to mention that if you're retired, you're not paying this because you don't have wages. This is only wage earners that would be taxed this way. Well, okay, so now let's look at it from the corporate side. How are the corporations going to be affected by this tax? Well, let's take the average small business owner again, and let's say they have a payroll of $24,000 a month. That gives them a $300,000 payroll. All right. On that payroll, they aren't going to pay 6.2% like they have been doing. They're going to end up paying an additional 6.2%, which gives them an additional tax of $18,600. Well, okay, that comes right out of the profits, right? Well, let's go another level. What about a business owner that has a $100,000 monthly payroll? Well, I know several business owners that do this. Well, that 100,000 times 12 months, you've got $1.2 million in payroll. In other words, keeping people employed. Well, at an additional 6.2, we now are going to pay about $74,000 in taxes. Well, that first small business owner that had the lower number, 300,000, that could be the difference between employees getting raises, new benefits, or not. In this scenario, what we're looking at with 74,000, that could be the difference of hiring someone or laying somebody off. So this is kind of critical. These are big numbers we're talking about here, and not just for big corporations, but we're talking about the small mom and pop type shops that are out there that are, they're doing a great job, but you throw this additional tax on there, and that's going to be kind of cumbersome to them. What does this all look like? So let's talk a little bit about how this could affect the economy, because where the economy goes, so goes the market. So if we're thinking about these additional taxes, not only on the individuals, but also on the corporations, it is going to put a drag on the economy. And actually, there have been studies done on that already based on the proposals. So the question is will more taxes have a drag on the economy? And the answer, according to the Tax Foundation, is really a resounding yes. According to the Tax Foundation, the Biden tax plan would reduce the economy size by about 1.47%. So the GDP would drop that much. And that's in the long run. The bigger problem, or part of that problem, is the fact that your full-time equivalent jobs, they're estimating that there'll be 518,000 less full-time jobs moving forward. So that's unemployment. Anytime you have higher unemployment, you're going to have additional drag on the economy and certainly debt load for the country. So these are the things that we're looking at. Now, again, am I concerned as to which tax plan we're going to get? Well, I kind of like the tax plan we have right now. However, that might not be my choice moving forward, right? I might be, and as well as everybody else, under a Joe Biden tax plan. And if that is the case, we have to have a plan to try to mitigate the taxes moving forward. So should investors be concerned about higher taxes? Well, I'm going to say yes. But if you have a plan, not so much. I mean, it's not going to be as much of a problem. Now, a couple things about planning and strategies. You've all heard me talk about the 5 different strategies that we are implementing or will be implementing relative to the next downturn in the market, which we believe is still coming. But on top of that, we have to look at the tax planning and advanced strategies that we can employ if there is a change in the presidency and Biden's tax plan actually comes to fruition. Now, we have got a lot of great resources here at Daniel Krug and Associates. One of them is City National Rockdale. They do a phenomenal job of research, and they put together an election special bulletin. And if you want to copy this web address and stick it into your web browser, this PDF will come up. And the brochure right here goes through all the changes in the tax laws. We couldn't go through everything in this show, it would take way too long. But they do a great job of explaining the differences between the Biden plan and Trump plan. What they also do in that report is they give you different strategies that could be employed to help mitigate some of the taxes moving forward. So I would highly recommend that you get this election special bulletin from City National Rockdale. Again, just copy and paste this web address in and you'll be able to download it yourself. So they've got a lot of great information in there. If you see a strategy that you think really might work for you, give us a call. We'll also be looking at this as we're moving forward with each one of our clients to determine what strategy is right for you. So that being said, that's going to bring us to Tell Me More. Well, we're actually running out of time. So what I'm going to tell you is go to our Daniel Krug and Associates YouTube channel, and you will actually see all the past videos that we've done on webinar. And they're all broken down into 3 to 5 segments, so you can kind of take little bites of what we've talked about. In addition to that, we've got specific strategies, the strategies 1 through 5 for this crisis and future crises for that matter. So you can actually go in here, take a look at this, get a cup of coffee, and just kind of relax and watch and learn. So take a look at the YouTube channel for more information. And you know what, Rocky? I think that kind of brings us to the end here now, doesn't it? So I'm going to pass it back on to you.
Wow. A lot of information, Dan. Appreciate you bringing that. I think it helped people realize there is differences coming potentially, but we can quantify them and we can create strategies to mitigate that based off your individual situation. So thanks again, Dan. Thank you to everybody that's been on watching. Again, there's no need to worry. You take care of your family, and we will take care of you. So we're ready for 2020 and beyond. So you have a good day, and thanks again for watching. Goodbye, everybody.
Goodbye.